Hello and welcome everybody back to the Pulse here, hosted by PeakBot. I am Dillon, joined by my co-host and co-founder Ben. Ben, good to see you this morning. We are both, for any regular listeners or viewers, can determine this. We're both outside of our natural habitats. I'm at my dad's in his kitchen, and Ben's outside of his house down in Myrtle. So we're working with an away game here, but we still feel very good about this week of trading and what we're going to bring to you here in this morning's show. Of course, relatively regular scheduled programming. We're going to talk through a couple things as far as the approach to PeakBot and automating your portfolio and kind of the mentality to have being a trader versus an investor. Neither is a bad choice, but risks come with both. So, Ben, we'll be handing it over to you in just a second to review our watch list, which I would like for you to go over. We got a new view there. Seems like every 2 or 3 weeks we have a new setup on the watch list.
It's been every week. Every week we're updating this thing, but it's all good. So yeah, I'm gonna pull it up right now. I'm going to be like looking this way because, as you mentioned, like we're not in our home offices here. So as you mentioned, Dylan, like we got a bunch of updates. I'm going to zoom in just a second. I just wanted to show. Typically, we had this like line going off to the right and said, if you want more detailed information, go to the right. Well, there was a lot of confusion about finding that detail. So we just pulled it all right next to the I'll call it the simple chart. So in this simple chart now, I'll zoom in there. Second. Okay. So on this simple chart, we are just showing the company name, ticker, price. We moved over the trend and the risk level. And we'll get to how that impacts your positions in just a second. We got our max loss, the estimated cash needed in the case that you're assigned. Again, we're talking about weekly expiring contracts that we are trading the wheel strategy on. So starting with cash secured puts, and then if you get assigned selling covered calls, we do have a hedged version of the wheel that we automate with PeakBot, and that is we're starting by selling put credit spreads, and then if assigned, selling call credit spreads. So that's where our max loss is derived, is from that put credit spread. It's the distance between the sold strike and the put strike. We've got the estimated cash needed, again, in the case of assignment. Your estimated weekly return, again, all these are estimates. Things could change when the market opens. Market's set to open in about an hour here. Things could change when the market opens. Numbers will adjust. So, don't take this as, I'm going to make $42 on Marathon this week. That could very well go up or down by the time you actually get into a position. And then we take the estimated weekly return percentage, and what we're doing here is we're dividing your weekly return in dollars by the estimated cash needed. So you know that if you put up potentially $1,500 in Marathon, you could potentially earn $42 back, and that's a 2.8% return on the cash that you needed to put up. Now we have the additional information, as mentioned, to the right, where you can see the different strike prices. So I'm going to zoom in a little bit more. Specifically for the sold put, we're selling the 30 delta. We're buying a put at the 10 delta. That's how we get to our net put premium of $42, as mentioned. We've got the sold call strike. We're selling the sold call at the 50 delta, and then we're buying a call at the 20 delta. I am going to switch over.
Again, we're not at home.
I'll do that. Yeah, I'll do that in a second. I just realized I'm on the Google Sheet. My Chrome crashed on me this morning, so I had to refresh everything. So anyways, let's get back to these markers here. So we've got the trend and we've got the risk level. Now, anybody who's been automating with PeakBot for a while has seen the same stocks at the top of our watch list here for a while. Like Marathon. Zim is new. I haven't seen Zim for too many weeks in a row. But Riot, Affirm, Coin, Carvana.
Intel's up there because of Intel's definitely up there
because of earnings. If you see a highlighted yellow row, that's because earnings is upcoming. XPEV, Sava, Wayfair, Rivian, like all these stocks that aren't highlighted in complete yellow. Those are all typically towards the top here. And if you notice one thing in common with each of them, the risk level is either very high or high. And I'm going to kick it to Dillon in just a second, because Dillon, I know you've been talking to PeakBot traders all week about this.
Yep.
It was just a hot week for this, basically because the market's kind of choppy right now. Some people are getting behind and freaking out a little bit, which is okay. We want to be here to kind of explain things. But if you scroll down further, you'll eventually get out of this high and very high. You'll start to see some moderate risk levels, and then you'll start to see some lower risk levels. I know, for example, Dillon, Datadog, it's been bullish and lower in terms of risk for a few weeks now. Pretty tempting, especially considering you could earn about 0.6% on your money. And then you go down here, we got a streak of 4 different tickers. TQQQ, a popular, actually it was in the 10 most traded stocks on the wheel within PeakBot in 2023. So that's one that I've used before, and Dillon, I know you have too. We got DoorDash. So anyways, Dillon, why don't you give us a brief run through of, if you are automating the wheel strategy or just trading it manually, really, this watch list is helpful for either, right? Like you can trade manually, use this watch list. It's great. We compile the highest paying premiums for weekly options contracts. We're also looking at the most liquid options chains. If anybody's interested in how we compile this list, just throw a question in the chat. Again, we are live. We'll answer questions live. If anybody has any questions, put them in the chat. If anybody wants us to look at a particular ticker, put it in the chat. We'll do it. But Dillon, why don't you give us just like how do you differentiate between, as you mentioned, trading and investing as it relates to the wheel here?
Yeah, absolutely. So, Ben mentioned I talk to traders more than really anybody else here at PeakBot, and I had to talk a couple of people off the ledge this week, and more than a few people, right? And the conversation that I go about having with these individuals, first off, I don't get a call unless they're trading. Most of the time, they're trading a very risky stock. They got to sign their shares. They have a relatively large unrealized loss on their account, okay? Hundreds of dollars, maybe even thousands of dollars, depending on their portfolio size. And they start panicking, right? A lot of these conversations happen with traders who are relatively new to PeakBot, okay? Either on their 2-week free trial, because we have one, or new to their subscription. Now, the conversation they come to me and having is, okay, well, I'm freaking out. This algorithm, I thought it was going to be making me money, and I'm just losing money right now. And then really what I like to do is walk them through a couple things. I ask them a couple questions. I go, first of all, the real idea here, the wheel strategy, which we didn't reinvent the wheel, we just automated it, pun intended, right? This strategy's been around for decades. It's time tested. Wall Street, hedge funds, retail traders have been trading this strategy for a very long time. And what's known is that it's not a quick flip. This is a long-term, slow growth investment strategy. We're collecting premium. I like to say as a form of passive income. Others might say that there's no such thing as passive income, but we can have that argument on another call. But the point is, we want to make you 0.5% to 1% a week, okay? And in premium, and that's taking into consideration losses. With premium, we want to make you, and the chart spells this out for you, between 0.25% and 2 or 3% in premium, okay? So what people freak out is that they'll be trading stocks like Marathon or Rivian or Riot, and they get assigned the shares. These are very volatile stocks. We tell you that because at the top of the watch list, it says very high risk. And you can see the distance of the spread compared to the cost of the stock. It's all over the place. And so the first question I ask them is, do you know anything about this stock? Right? And I have humbled a few people. I say, hey, do you know anything about Marathon Digital Holdings? They go, no. I go, well, why are you trading it? And I'm not trying to be a jerk, but I asked, why are you trading it? They go, well, I saw it at the top of the watch list. It's paying the highest premium. I was in. I was sold. I go, well, let's take into consideration a few things. If it's at the top of the watch list, sure, it has the highest reward, but it also brings the highest risk, like anything else, right? Sometimes it's too good to be true. You guys know my range, 0.5% to 1.5% on that watch list. If it's paying more than 1.5% in a given week, my estimation, not the world's, it's getting a little too volatile. So these people will call me and say, "I'm down $1,000 on my marathon position. What am I get? What's going on? Can I cancel my subscription? I want to close my account." And I tell them, "Look, here's you got a couple choices. You bulldozed through every red flag and said, okay, I'm only going to trade one or two stocks. I'm going to choose the most risky ones. I'm not going to diversify, and I'm going to just collect my highest premium." Well, those premiums can be wiped out by these unrealized losses, but there's a couple things. A, it's unrealized. You still own the shares. And some of these people, they're newer to trading or investing. They don't even realize they still have the asset. I go, look in your account. You still own these shares, and you're going to collect another round of rent or premium this week. And you're going to continue to do that regardless every single week. So the idea is, if you can collect enough rent throughout the year, right? This is not a strategy that you do for 2 or 3 weeks. This is a strategy that you do for 2 or 3 years or 20 or 30 years, right? Because the accumulation of everything, we're going to collect enough rent to eventually outweigh your losses along the way. And the one individual I spoke with owns rental properties, short-term rental properties. I go, "Oh, you just came right into, you just walked right into my hand here." I go, "Let me ask you a question. Would you rather rent to a family of 3 or the rowdy college kids?" Right? And his answer happened to be, "Whoever's going to pay double." I go, "Okay, then. Well, you've said it. You're a gambler. You like rolling the dice, and that's why you're trading marathon, and that's why you're down $1,000 right now, because you chose danger when you woke up this morning, right?" And so I asked him. I said, "Hey, when the college kids come into your rental property and they bang everything up, and there's holes in your wall, and your dishwasher's foaming and broken," I go, "What do you do?" He goes, "I fix it and get another round in there next week." I go, "Exactly. So you can't quit now. Fix it and keep going. Keep collecting rent," right? So you're either going to stay the path because you believe enough in the stock that you're trading and say, "Hey, I'm good enough to earn the premium on this week to week," or you're going to say, "I'm going to cut bait. I'm going to simmer down, and I'm going to go on stocks that I feel better about, the Amazons, the Verizons, the Googles of the world," as an example, right? I asked him, I said, "Hey, if you were down $1,000, but this happened to be Amazon instead of Marathon or Riot, would you be panicking and calling me?" I go, "Absolutely not." I go, "Why?" They said, "Well, because I know the stock's going to go back up." I go, then you just answered it yourself. So when you're at the top of that watch list and you see a lot of red, very high risk, you're choosing, in my opinion, to be a trader. And that's okay. But if you're going to be a trader and take risks, stick to it. See it through. Stick to the plan. Go for a whole 6 months, for a year. Even these very volatile stocks, they might be paying 1.5%, 2% a week in premium. If you made 2%, right? Let's just take Zim or even Marathon's paying almost 3%. But let's say Zim pays an average of 2%. I'm just going to round up 2% all year. That's 104% return in premium. Right? Our goal here is to make you 20%, 30%, 40%. And there's outliers, of course, on both sides. But if you can tell yourself, all right, if I'm going to make over 100% in premium this year, do I believe enough in this stock not to kill my value 70%, 80%? If you're still not sure if that stock that you're trading isn't going to wipe out all your premiums throughout the year, get off of it. Go somewhere else. But if you want to be, and that's you being a trader, but you can't quit, right? When the going gets tough, you can't just walk out. The other side of it is being an investor. Ben, scroll down a little bit. Go down to the bottom of this watch list where we're seeing 0.5%, all things like that. My father, you guys are sick of me saying this at this point, but my dad trades Amazon, Verizon, and Google to the day he dies. He doesn't touch it. He doesn't look at it. Why? Because he knows that those companies are going to be okay in the long run. Right? At least that's the mentality to have. So he's acting more as an investor. If you're at the top of this watch list, you're acting more like a trader. Both are okay, but you got to stick to it. If you just bow out when you're down $1,000, that makes you a loser. I'll only tell people who I'm very close with that they're a loser if they bow out right now. But it is true. So
it's a long-term play.
It's a long-term play.
Dillon, I'm gonna pull up your chart if you don't mind,
please.
that we shared on Twitter to just hammer Dillon's point home here. We did an analysis on all of Dillon's wheel trades in 2023. Now we started trading the wheel towards the end of January, so we didn't get a full year because we didn't have the wheel available for the full year. But I mean, if you take a look at this chart, it took a couple of months for Dillon to get going here, right?
Yeah.
And that's the power of compounding. But you can see that there are going to be losses. There are going to be losses along the way, and we see that in September, October, into November, this time frame when the market was declining. Well, so was Dillon's portfolio, but he stuck with it. And then as soon as the market turned around, he started to see some steady growth back up. So there will be wins, there will be losses. I think, Dillon, you made a good point. And guys, hit that like button if you thought Dillon's analogy was good. And explain the difference between being an investor and being a trader with PeakBot. Very, very well, Dillon. I thought that was great. And I think your chart is a great visual to show people that, hey, this is, a long-term play. Like, you stuck with it for a year. We actually did a deeper analysis. Maybe we'll go over it on another show. We did a deeper analysis of Dillon's trades. I think you traded like something like 44 different tickers over the course of the year. And your top earner was Carvana. And if we go back to the watch list, Carvana is and has been at the top of this watch list basically the whole year. You can see it's ranked as a high risk level right now. For the most part of the year, it was very high risk level. But to Dillon's point, if you're confident, and Dillon, I think you mentioned that you were confident in Carvana stock. If you're confident that that stock long-term is going to be okay, if you stick with it, I mean, Dillon, I think it accounted for a little over a quarter of your earnings here.
I think more than that, quite honestly. I think a significant amount more than that. And that kind of speaks to, you can live in both lanes. I acted as a trader and an investor last year, right? I have certain stuff, and that's the beauty of diversifying your portfolio. The average account size for PeakBot, our average trader has between $10,000, $15,000. When people sign up and you only get $2,000 going, although that is technically the minimum, you're not giving yourself much room to breathe. You're putting all your eggs in one basket. I'm going to go on some safe stocks, some mid-tier, and I'm going to roll the dice on a few. And that allows me to do both. Let me tell you, July last year, we were ready to sell this thing to millions of people. I was up 65%, this idiot, right? But reality strikes. I lost half my shirt on the last 3-4 months of the year, but I still finished at 31% on the year, which is better than 95% of retail traders. And I did it with my hands in my pocket, and I did it fully automated, right? I picked the stocks, our bots did the rest. So, Ben, look, I hope that resonates with people. We're here to automate it. We're here to make it easy, but we're here to save time and eliminate emotion. Don't manage this. Manage it, pick your stocks, feel good about it, but don't overmanage. When the team's down at halftime, the coach doesn't go in and freak out. They say, hey, if we stick to our plan, if we do what we've done in practice all year and stick to it, we're going to come out, we're going to win this game. It's the same mentality here. So I'll hand it to you, and we can take a look at some charts.
Yeah, let's get into some charts here. I'm going to pull up Marathon here, zoom in just a bit. So I'm on my Tradier account right now. If you go to Tradier, you can go to the research tab and pull up these charts. So you guys know the drill by now. If you're a consistent viewer, I like to go to the 1 month chart just to take a look at what the overall trend is. Again, Marathon, we know, very risky, high risk right now. We see that it looks like it's been in a consistent downtrend for pretty much a month now, almost a month at this point. So in that regard, caution, it is paying high premium. The two tickers we picked out this week, by the way, were around cryptocurrencies because there's all the buzz around the Bitcoin ETFs. So we got a lot of questions about different companies in that industry. So we've got Marathon here. If we scroll down, Tradier has a pretty sweet technical analysis tool. It sifts through a bunch of different technical indicators, and then it gives you basically an opinion on the stock direction. So, or whether or not you should buy. So if we click on more here, I like to look at the week setting here. And if we look at the week setting, we're looking at a buy signal.
Oh.
We got 10 buy signals. We got 10 neutral. We got 10 sell. And, if we look at our PeakBot trend, we're saying neutral. When we compare that to to Tradier. It's pretty close. I bet you if there was one less buy signal, this would line more up with neutral. So as we know, the wheel strategy on the put side, at least, it's a bullish to neutral strategy. So if something is neutral, that's okay. We just don't want to continue to drop. Now for me and for Dillon, Marathon's a little bit too risky for us. So I think we're going to stay away. Next company I'll pull up is Coinbase, ticker Coin. We got to change this to the 1 month chart. Similar, very, very similar chart to Marathon. Sharp decline over the past couple of days, slight increase. Technical analysis for Coinbase,
About
pretty
the
much
same.
same exact as Marathon. If we go back to the watch list, Coinbase is noted at neutral. One more I wanted to pull up was Intel, because Intel is reporting earnings this week. Pull up the 1 month chart here. Looks pretty choppy. It looks like we're kind of neutral in this channel for the past month or so, or since the beginning of this month. Again, Intel doesn't normally pay this high premium. Looking back at the chart, it's important to stay up to date on the chart so you get a feel for what's consistently at the top and what is not. It's pretty safe to say, I'll say for the most part, that if a company's reporting earnings and they're within like even the top 20, they're usually not there. You'll recognize, again, over time, you'll recognize the companies that should be there. So Intel has a bullish trend indicator from PeakBot and high risk, and is paying out about 1.5% estimated in premiums this week. Again, not typically the case. But hey, if you think Intel's going to have good earnings and for some reason you want to play that versus other stocks, the information's here for you to make that decision. If we go down to our technical analysis tool, change that to a week, it seems like Tradier agrees. We've got a buy signal here. So, just a word of caution that, trading earnings is risky. This isn't financial advice. We don't give financial advice, not financial advisors. But, trading earnings, you don't know which way the stock direction is going to go, right? Companies could report well, and some companies could report not well. And we know that with earnings come big swings in stock price. So those were the three that I wanted to bring up on the charts today. Dillon, I'll kick it over to you to show everybody how you can automate the wheel strategy and the vertical wheel strategy with PeakBot and make updates to your portfolio.
Awesome. So, Ben, I'm without a second monitor here today on the run. Can you see my screen? Because I can't see you.
I can see your screen, yes.
All right, fantastic. So we should be looking at the PeakBot home screen on light mode, dark mode. I think I'm going to stick with dark mode this week. So as we now do in this part of the show, we take a look at my portfolio just so everybody knows we're starting to, we've always been transparent, but we're starting to really be very transparent. And my account balance, so everybody knows right now, is at $13,740.75. Okay, so that's about how much capital I'm going to look to allocate every week. I'm not putting money in here just to sit on the bench like it would in a savings account. If I got money in here, I'm going to put it to work, right? So I was assigned on Run. I forget if it was last week or 2 weeks ago. I think it was 2 weeks ago. So I sold a call, a covered call or a call credit spread last week. Didn't get back above my strike price on Sunrun. And so I'm still owning the shares, 200 of them. My cost per share is $15.24, and it's trading at $13.17. So I have a loss. I have a $1,400. I'm sorry, not $1,400. I have a $415 loss on that position, right? And I'm down almost 14% on that position, but I'm not freaking out. I believe enough in the stock. I believe enough in the premium that I'm going to be collecting over time to keep that running. So with Run, I'm actually running 2 contracts, which is why I said I have 200 shares. I'm going to keep that thing running, pun intended. So I'm going to be keeping run this week, and I'm going to be selling a call credit spread on run. If we go and look at that on the watch list, let's find it. Here it is. It's
You're not
trading.
sharing that screen, by the way.
Oh, no. Okay, share this tab instead. Okay. How about now?
You got to zoom in.
Got to zoom in. All right.
There you
Is
go.
this better? Okay,
A little
we're
better.
working.
Yeah.
We're working with it. So Sunrun trading at 13.17. It's neutral. It is considered high. The risk level, I don't know if we mentioned that this week. It's based on the spread versus the cost of the stock. So since it's a low cost stock, and Ben, correct me if I'm wrong there. Since it's a low cost stock, even though the spread is only $1, it still falls into that high risk category. But I'm going to be setting aside $1,200, although it's double. So $2,400. I'm going to be making about $22 in premium, which is just shy of a 1% weekly return. And I'm going to be more interested in this side over here. I'm going to see. I'm going to be interested in this side over here, which is the call spread data. Okay, so I was wrong. I'm making about 66 in premium because I didn't take into consideration I'm on the call side. So I'm looking for that stock to get back above 13.50 this week in order for me to sell my shares. And if I do, I will sell them for a loss. That's another part of the conversation we have. People tell us, well, I don't think you're taking into consideration that you're going to sell those shares for less than you got to sign that. We know that's the strategy, right? We're aware of that. We want to take our losses and get back on the side where we don't own shares and selling puts.
That's why we sell calls at the 50 delta, because we want to give ourselves statistically a 50% chance of selling those shares at expiration and collecting higher premium. Plus, we buy a call so we can participate in upside. And actually, Sunrun and Riot were 2 big winners back in December, where the bought call option contracts increased in value like 800% or something like that. So there is some strong upside incentive on the call credit spreads.
Yep. So the other 2 stocks that I'm keeping this week are AFRM. Okay, so that's right here. I'm choosing to be a little bit of a trader, not an investor here as far as my own rules go, right? That's above my 1.5% return. And Ben, you know what? I'm thinking this out loud. If we have, on the call side, my weekly return, and again, I'm the layperson here, my weekly return is going to be higher than 1.68. I'm not on the call side for this. I'm on the put side. But right? Because I would technically be earning, if I own the shares, about a $115 premium.
Yeah, we don't put percentages there because we don't know what price people were assigned those shares. And it's going to yield higher premium because we're selling contracts closer to at the money.
Yep. Got it. Okay. So just thinking out loud. So I'm keeping AFRM. I didn't get assigned last week. A successful contract, earned my premium, and looking to do the same thing again this week. It's trading bullish, trending bullish. My max loss is $350. I'm going to need about $4K to enter that. I'm earning $67 in premium weekly, and that's about a 1.7% return. Keeping that. The other one I'm keeping is TQQs. Love this one. So trading at 54.54. Bullish and lower. When we're green here, that we love that, right? We love that. So $200 max is what I'm risking. $5,200 in capital, $25 in premium, which is just under 0.5% return. It's hard to look down this far on the watch list when you see all these other stocks that you might be familiar with. But if you made 0.5% a week all year, you're making 26%. Again, 9 out of 10 traders aren't doing that. So again, there's accumulating effect here. The stock that I am going to be changing, I'm going to be getting rid of CCL. So I believe that's not even on the watch list anymore this week. And Ben, maybe you can explain for just a second why a stock might fall off of the watch list.
Yeah, so we've got some automations built into this watch list. A stock will find its way off of the watch list if it drops below $10 or the premium that it's going to be paid out, is below $10. And that's for the hedged watch list. And
Yep.
you'll just see that as a regular wheel tab. For unhedged, you'll still see lower dollar value stocks. The reason why we filter out on the hedged is because we are buying a spread. So we are giving back some premium for that, call it insurance policy. And the trade's got to be worth it to you, right? Some brokers, brokers charge different fees, but some brokers will charge, $5 to $9 for an assignment fee. So if you're only collecting $10 in premium and you get assigned, well, if that fee is $9, then you only made $1. Is it really worth the risk at that point for $1? The answer is probably not. And I think a lot of people would agree with that.
Yep.
Again, not financial advice. We're not trying to tell you trade this, don't trade that. It's just, we don't want to show any, like for our own watch list, like we don't want to show any stocks that aren't going to be worth the risk.
Exactly. So thank you for that. And so I'm going to be jumping back to my PeakBot portfolio in just a second. I know we've been watch list and chart heavy today, and y'all want to see how the magic works, and I'll show you. So I'm going to be removing CCL, which is Carnival Corporation, all right? And I'm going to be adding Peabody Energy, BTU, all right? So transparently, I'll say it. This will be the first time I'm trading BTU on the wheel. I'm not overly familiar with the stock. Okay, I know of it. I've looked at the chart before, but I'm not overly familiar with it. And I'm okay with that because I'm well within my range here. I'm making less than 1% in premium, which tells me the stock isn't all that volatile, okay? It's trading at 26.08. We got a bullish trend. This risk level is still high based on the stock price and the spread. I'm going to be risking $150. $25.50 in capital, earning about $20 in premium, which is a 0.78% return. So I'm going to bring back here. Ben, let me know when you can see my PeakBot account.
Yep, can.
Okay. So I'm going to be, I'll zoom in just a little bit here. I'm going to be removing CCL. That didn't pay off for me. I'm going to be removing CCL. How I did that was you can either check the box here and click edit status, or you can just click on the word active right here. Either way, it gives you the ability to pause, play, remove, as well as hedge your position or unhedge it. So I'm going to remove that stock, and CCL is gone. And now by clicking start new automation, again, 3 steps. This bot actually, our bots, all of them, execute the trade on your behalf. Remember that. If you're busy at work with life, vacation, travel, traffic, whatever, this is going to handle it for you. All right. So by clicking start new automation in 3 steps, I'm going to be in and out of here. Step 1. Now I'll zoom in. Step 1, select your bot. Okay. We've been talking about the wheel. Iron Condor is still option. And I think, Ben, you've been trading it. It's been getting a bit better.
Yep.
Again, Iron Condor, neutral strategy for a neutral market. But the wheel. So selected my bot. Now I'm going to select my stock. Let's see. I forgot what this ticker was, BTU, but I can type out the name of the business, even though they don't match all that much. And it's still going to populate for me, okay? And the final step is set my budget. How many spreads do I want to sell? Now, if this was unhedged, this would say contracts, all right? But since it's a spread, I'm technically entering 2 contracts, and it'll tell me about how much capital I need to execute the trade with a bit of a buffer built in because the stock prices move. I'm going to hit activate. And that stock is going to be added in to my automated portfolio, and I'm ready to rock and roll. So you'll see my automated portfolio now is about $14,000. Again, it's an estimate. We build in a little bit of a buffer. I told you my account balance is about 13.7. I have margin on my account, so I can dip into that a little bit, and I'll be okay. So, Ben, that's my account for this week. That's what I'm rocking with, and we'll see what we can do.
Awesome. Anybody that wants to try exactly what Dillon's doing, we got a 2-week free trial. Go to usepeakbot.com. I'll put that in the YouTube comments. Get started today. If you get your broker account integrated, we're integrated with Tradier and a couple other brokers. If you get your account integrated today before, I think it's 10:50, and get stocks in there, you'll see some trades today.
Yep. So we like to miss out on the first 90 minutes of chaos in the market. So we enter our contracts between 11 and 12 o'clock Eastern. Let us know if you have questions. We appreciate you tuning in. Ben, I'll say it. I think that was a great show.
Yeah, it's fantastic. Great
We
job.
did well. And by the way, a quick shout out to our partners at Tradier. There's a lot of work that goes on behind the scenes here. We make it look like we're doing all this. We're not. There's a couple people at Tradier, Reuven Max, a couple other guys who really help us out here. So we really appreciate you. I'm just trying to get brownie points.
Yeah, every time we say, I'm going to pull up this screen, I'm not doing anything.
We're not doing it.
We have people behind the scenes.
It's like synchronized swimming. We're doing a dance here, but appreciate everybody. Best of luck trading this week. Get started on PeakBot. Determine if you want to be a trader or an investor. Both are okay, but promise us that you're going to stick to it, because over the course of time, we're confident that we got a great solution here for you. And we're on our way to be the household name for automated investing. So appreciate you. Thank you so much. And we'll see you at the peak. Take care.